Hello, as we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. But if you've been watching the market all over the last few weeks, I don't need to tell you, it has been a wild ride. And unfortunately, these aren't really the kind of conditions we like to trade in. We like this kind of stuff where it goes up and down, but, roughly in a range over time. This huge move doesn't benefit us at all. Again, not to complicate it, but the actual move is exceeding the expected move on a daily basis. And what that means to us as traders is that is bad. Essentially, when we trade, we like whatever the market is expecting. When we make our trades, we are hoping that the actual move is inside that expected move. That's the trades we make. And when that happens, we make money. That's, again, kind of this area here. When we start having this kind of stuff happen, nothing good comes of it for us. That's not where we want to be as traders. And obviously, the market's in flux. This is a rare time. I've never seen anything quite like this. So this is a tough time to trade. So this is the S&P 500. Again, we're going to look at all of them. They always look fairly the same. Here's the Qs, which is the NASDAQ. Looks roughly the same. As we know, the IWM's been the weakest of all of them. Looks roughly the same over here, although it's just down from where it was. So they're all about the same. Volatility is still fairly high all across the board. So that's good. Volatility is high, but again, volatility works in our favor, again, if the expected move is larger than the actual move, and that's not what's been happening lately. So what are we going to trade now? Well, we're going to go to Nvidia, and you can see this is just like everything else in the market. It's been on a constant kind of burn downwards, but it kind of bounced back and is bouncing around here, and you can see volatility is fairly high. Except for this huge move here, this is about as high as volatility has been in the last roughly 6 months to a year. And what I want to look at here is kind of where its low was. You can see it was around $86, $87 was the low. And it looks like, at least for now, if we got back to this level, that would be kind of a good place to say is around the range. So we're going to say like this is the range recently in the last few weeks. Doesn't mean it's going to stay there, but that's our assumption as traders. We're going to hope that it stays in this range for the next 40-ish days. If you go over here, you see earnings is on May 28th. So we want to be out of this trade by May 28th because we don't want to hold this trade through earnings. So let's go to trade page. Remember, 86 is about our low, 120 is about the high range we're looking at. So if I go to the trade page, I'm going to go right here, and you can see this says May 30th, right? What that means is this expires on May 30th. Remember, earnings are on the 28th. So we are going to close this trade no later than May 28th and get out of this before earnings actually happen. Hopefully, we've made our money long before then, and we're out long before this even gets to be a problem. But if it is, we are definitely closing this trade before earnings. So we're going to do the 40 days. Right here is our expiration cycle. I've saved us the trouble, and I've already set this up for us. Where is it? Maybe I haven't. So we're going to go here, but I know, as I've mentioned, what I want to do is 86 or 120 was about the high that we were looking at. So I'm going to go $2, and 86 was about the low. So I'm going to go $2. And there you see we're collecting 74 cents. Remember, we need to collect at least 66 cents or more to make this a valid trade. But here's one quick thing I want to show you. This is called a skewed iron condor, meaning let's just make it easy. Let's just say the price is 101. So we're selling a put that's $15 away, but we're selling a call that's about $19 away. So what that means is it's skewed. I'm putting the put side closer than the call side because I believe, purely my assumption, that the 86 is kind of the bottom level of where this is going to go. Hopefully it stays kind of above that number. And I'm leaving more room for it to go up. So I'm hoping that the bottom is in as far as like how low it'll go, and that there's a better chance over time it's probably going to trickle upwards instead of downwards. So that's why I've left more room on the call side than the put side. This is called a skewed iron condor. I'm skewing it upwards, meaning I'm expecting it to go up more than I'm expecting it to go down. So, assuming nothing changes in Nvidia tomorrow when the market opens, we're going to go up to 120, down to 86, create this $2 wide iron condor. As long as we're collecting at least 66 cents or more on this trade, that is a valid trade, and that is our trade for tomorrow morning. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.